Why Michael Burry hates Tesla so much. Shockingly important. If there's anything I've learned in my investing journey, it's been to not bet against Elon Musk. Whenever the skeptics went short on Tesla, a vast majority of traders had lost money betting this extraordinary billionaire visionary. In short, Elon Musk can be compared to a real-life Tony Stark. Genius, billionaire, playboy, philanthropist. Welcome back to Investor Secrets. Today we're going to talk all about why Michael Burry hated Tesla so much, and why he shorted it, and what's his plan for 2022. So let's get right into it. Dr. Michael Burry, who's well known for his bets against big banks during the 2008 housing market crash, has recently gone on Twitter to express his views about Tesla, and this clash of the titans has Wall Street in shackles. According to his old tweet, the veteran investor stated the following: "So, Elon Musk, yes, I'm short Tesla, but some free advice for a good guy. Seriously, issue 25 to 50% of your shares at the current ridiculous price. That's not dilution. You'd be cementing permanence and untold optionality. If there are buyers, sell that #Tesla souffle." When taken at face value, the tweet can simply be viewed as a clash of egos between two gurus who both know their game well. But besides the tweet, Dr. Burry had posted a spreadsheet that had details of all the leading auto manufacturers in the world alongside Tesla to justify his hypothesis. Dr. Burry's main hypothesis was the fact that the revenue, EBIT, and total market capitalization for the leading 32 auto manufacturers were $2.3 trillion, $99 billion, and $806 billion, whereas for Tesla, the revenue, EBIT, and total market capitalization were $24.5 billion, negative $69 million, and $438 billion. In a nutshell, if you see the numbers from a valuation perspective, you are essentially paying roughly 50% more than Tesla to acquire a stake in all the other 32 auto manufacturers, and in the process, you'd be getting 90 times more in revenue. Following the announcement, shares of Tesla Inc. plummeted by 7.4% the very next day. This is essentially what short sellers benefit from. In simple terms, when you're selling short a particular stock, you're betting against the stock price going up. The simplest way to profit is to sell the shares at a high price to repurchase them later at a lower price, and the short seller pockets the difference. The one thing which needs to be kept in mind is that the shares that were sold short are, in most cases, borrowed from someone else. Thus, it's essential to buy the shares back later so that the short position can be closed. What we don't know is how long Dr. Burry plans on keeping the short position open. A few weeks prior to Tesla's stock split, the share price rose to a whopping $1,100, taking the company's market cap to an incredible $209 billion. This put Tesla roughly $6 billion ahead of Toyota back then, making it the most valuable automaker in the world. Tesla's massive ambitions were initially heavily reliant on the success of the Model 3, an affordable mass-market electric car that was supposed to revolutionize the auto industry. Elon Musk had outlined this in his master plan memo way back in 2006. The strategy of Tesla is to enter at the high end of the market, where customers are prepared to pay a premium, and then drive down the market as fast as possible to higher unit volume and lower prices with each successive model. Step 1. Build a luxury electric sports car that could make some money. Step 2. Use the revenue from selling the sports car to create a more affordable luxury sedan. Step 3. Once the luxury sedan takes off, use proceeds from this sale to market and sell a truly affordable electric car that the masses could afford. Elon Musk was about to bet the entire company on this little dream. That's why Burry's Scion Asset Management said in a regulatory filing in mid-May it had put options on 800,100 Tesla shares as of the end of the first quarter. Details on the strike price of the puts, their value, and whether they were part of a broader trade were not available. Based on Tesla's closing price of $667.93 at the end of the first quarter, the value of that many shares would have been about $534 million. The actual value of the options position was not known. Put options give investors the right to sell shares at a certain price in the future. Options analysts said at the time it was possible the puts disclosed in the filing might be part of a larger trade that would curb losses if the put position went against the fund. No, it was a trade, Burry was quoted as saying in an email to CNBC on Friday when asked whether he was still shorting Tesla. Media really inflated the value of these things. I was never short tens or hundreds of millions of any of these things through options, as was reported. The options bets were extremely asymmetric, and the media was off by orders of magnitude, Burry told CNBC. One of the investors profiled in the book The Big Short and the film of the same name for betting more than $1 billion against the US housing bubble, Burry has previously been skeptical of Tesla's sky-high valuations. Let's have a look at Burry's portfolio for 2022. And so this is his complete portfolio as it looks in 2022. His hedge fund is actually spying on asset management, and he's currently got 6 positions to a value of $75 million. And these were the companies that we've just looked at. But what was very interesting to me was how his portfolio looked at this time last year. Check it out. So this was Q1 in 2021, and a very different picture. He had over 30 positions. But look at the value. It came to $1.3 billion. As he was using a lot of leverage, you'll notice a lot of call options and put options, as he's shorting expert right hand. The biggest one by a mile was his big Tesla shorts, to the tune of $500 million. But it was also shorting US Treasury bonds. He's had call options on Alphabet and Facebook, so a very different portfolio. And as you can see today, it's a very different looking portfolio. So although he's reduced it massively, what's quite interesting is that if there's a huge stock market crash coming, then why is there no shorts on the market? That would be my big question. And just as a visual, this is the size of his portfolio, quarter by quarter, going back to Q4 2019. So you can see it was building up, and this was the huge Tesla shop that he was taking out, which was grabbing all the headlines last year, and now it's a very conservative portfolio indeed. So Michael Burry has certainly reduced down his portfolio. Like this time last year, it was at $1.3 billion, and now it's just sitting at a cool $75 million. So what are the conclusions and insights we can draw from these latest moves? Well, firstly, I wouldn't classify Michael Burry as an investor, like say Warren Buffett, and call him more of a trader, as more of his positions are opened and closed within 3 months. And although someone who genuinely believes that a big stock market crash is coming would reduce down their portfolio. Remember, this is one of the best known shorting experts in the world, so surely this is a once-in-a-lifetime opportunity to short the market, right? Well, as you saw, there were 0 short positions, so he can't be that confident of a big stock market crash, right? Well, I would say his actions are actually more neutral, and it's his words that were massively negative. And remember, he's still taking out brand new positions. So there you are, guys. I hope you enjoyed. Those were the latest moves by Michael Burry. So tell me, what do you think about his latest moves? Are they bearish, bullish, or neutral? Let me know below in the comments. If you guys enjoyed this video or think it was valuable, then don't forget to hit the thumbs up, subscribe to our channel, and hit the bell icon to get notified first. Also, feel free to let us know your thoughts about the next video in the comments section down below. See you soon. Bye.